Good afternoon, everyone, and welcome to Deloitte's Debrief Tax Webcast series in Asia Pacific. Our webcast today is from our indirect tax team, a series entitled Recent Developments in Malaysian Sales Tax and Service Tax. My name is Eng Yu, and I'm part of the indirect tax team in Deloitte Malaysia, based in Kuala Lumpur. I have the pleasure of hosting today's webcast. I have two speakers with me today, Nicholas Lee and Larry James Samaria, both of whom are part of our indirect tax team in Malaysia as well, based out of Kuala Lumpur. You may access our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I'd like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have any content-related questions, you can submit at any time in the Q&A box at the bottom right of the screen. We'll do our best to respond to your questions during the presentation. Second, all PC users can maximize or minimize each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Downloads and Links box. On the other hand, mobile device users can view the slides and answer the surveys on screen. Thirdly, if you require an attendance record for this event, you can download your CPE certificate by clicking the Request CPE icon at the bottom of the webcast console. Now, let me give you an overview of the topics we will be covering through today. Since the reintroduction of the sales and service tax regime back in September 2018, to a large extent, we have brought back some of the weaknesses and confusion that is associated with this SST, particularly for service tax. Now, as a quick recap, sales tax is a single-stage tax on goods manufactured in Malaysia and also goods imported. The rate is generally nil, 5 and 10%. Service tax, on the other hand, is a 6% tax and is applicable only on certain prescribed taxable services. Now, the major difficulty with service tax is that some of the key taxable services and other important terms used in the law and regulations has not been defined. Now, in an attempt by customs to help clarify and help, there have been frequent amendments to the law and also guidance released by them. Now, this combination has made compliance particularly challenging for businesses. Now, with customs starting the SST audit and now going to full swing, businesses may now have to face these issues head-on, so to speak. Now, in this session, we will look at some of the recent changes and developments, focusing particularly on audits. We'll discuss recent technical developments, the audit environment in Malaysia at the moment concerning indirect taxes, SST, and also GST closure audits, which are still ongoing. We'll look at then some key industry and business issues and finish off with some potential upcoming developments. With that, let me now pass the time to our first speaker, Larry James. Over to you, Larry.
Hi, Eng. Good afternoon, good morning, good evening, everyone. Let's just get right into it. So, as Eng has said, we have about just over 2.5 years of SST now since it came in, right? So just a quick snapshot of the landscape where we are at now, right? Now, as Eng highlighted, there's a constantly evolving and changing views taken by customs and the positions that they're taking in how they are interpreting and using and applying these taxes, right? It does lead to some level of confusion and frustration with taxpayers, right? Technical positions, interpretations by customs change, and although you would expect that there's always some degree of changes in a relatively new law, but it is challenging, and what is frustrating is sometimes is that they can withdraw or even change specific decisions that they have given to some taxpayers, and we have seen cases of those, right? The government, however, does acknowledge the cascading impact of SST. As you know, there's no input tax mechanism for sales tax or service tax. And there's various exemption facilities and reliefs introduced to try and reduce this, but it's a constant balance for them to balance this against actually collecting sufficient revenues from the tax. All right. So which brings us, there's always talk of future changes. All right. Changes in the sense of, are we going to expand further service tax, the scope of service tax, right? Bring in more services under the purview of the tax. And there's always talk of the underlying return of GST, all right? But for now, audits, the focus is on collecting money from SST, right? And the key way for customs to get this is now focusing on their audits to start collecting their revenues that are required, all right? So if we can move to the next slide, I think what we want to do is we cover some recent indirect tax updates, all right? Some more recent and some more important ones that have happened over the last few months. Now, I'll start with some service tax stuff, right? Now, service tax, if you're aware, if anybody's been looking at service tax, the law is pretty scarce in terms of details, right? So customs rely heavily on the issuance of guidance or guides that they issue, whether it's a formal guide or whether it's just answering case-by-case issues with on individual representations by clients. Okay. Now, a few guides were issued towards the end of last year. I just want to highlight a few important ones, right? Now, again, if you're familiar with service tax, you know that one of the issues that always come up is the interpretation of what is a taxable management service. All right. So the law has evolved. They have come up with certain types of services which they say are specifically taxable management services. Now, one of them is warehousing management services. But of course, what does that mean? In October last year, they came out with a guide for what is a taxable warehousing management service. All right. From one end of the spectrum, warehouse rental is not taxable, but the guide now provides a whole list of value-added services that would typically be provided by a warehouse operator, and those services are what customs are saying will be taxable warehousing management services. All right. Now, another issue that has cropped up because of this is between warehousing management services versus logistics management services. Now, logistics management services was specifically taxable, and then it was removed from being taxable. All right. So there could be some overlap between what is a warehousing management versus a logistics management, especially where a particular service provider provides a more end-to-end or a wider scope of services. All right, so that is still something that crops up in terms of questions asked to customs. So management services in general, they had a guide as well in October last year. The definition of management services doesn't really help much. It's still very wide. It almost implies that every service I provide, there's always some element of me managing my resources, and it sounds like that is a management service. But I just want to highlight a couple of examples that were given, right? Now, this is in respect of maintenance management services. So one type of management service that is taxable is a maintenance management service. The first concept introduced in this guide, and it's actually reflective of what customs have been saying over the last year or so, is the concept of preventive versus corrective maintenance. Now, preventive in this sense is more of a proactive type service. All right, I have a contract to manage the whole building or your plant or machinery, and my responsibility is to ensure that it is kept for the upkeep of this and make sure it's in working condition and it works. All right. So that is preventive maintenance, and that would be a taxable. That would be a taxable maintenance management service. On the other end, corrective maintenance is a more reactive type service. On an ad hoc basis, the customer calls me whenever something needs to be fixed or maintained, so that would not be taxable. All right? So complications, of course, will arise when I have a mixture of those services. I could have a contract with both. All right. So if it's not clearly segregated or the contract doesn't specifically mention, then the whole thing could be taxable. Now, the other one I want to highlight, and this is an important one, is that on building maintenance services, all right? Specifically, the example here is in the sense of the building owner or the landlord, for example, a shopping center, all right? I own the whole shopping center. I charge rental, but commercially what happens is I also usually I may split that rental or charge a separate service or maintenance charge. Typically, what this is the landlord recouping part of the cost that I incur on maintaining my own property, right? I own the building, so I'll maintain it to ensure that it's in good condition so that you can rent it, okay? From day one, it was always contentious whether this was a management service, all right? Some taxpayers, being prudent, they charged service tax from day one. Some took the position that no, it is just a component of rental and it's not taxable. Some even went to the extent of getting written confirmation from customs that it's not taxable based on their specific tenancy agreements. And in October, when the guide was released, customs confirmed what they had been saying and said, yep, this is not taxable. It's just a component. If you are maintaining your own buildings, it's not taxable. But just a few months later, in January this year, we had a series of meetings with them, and they suddenly said, no, actually the guide is wrong. They did a 180 and changed it to say, no, all these building maintenance services are taxable. Okay, so that's a clear picture of what I wanted to bring up on how fast things can change and the detrimental impact it can have on taxpayers, right? Disbursements and reimbursements, another issue that it's actually come back. It's still around since GST was issued during GST, and it continues to be one during SST. Now, they have come up with a disbursements and reimbursements guide. Okay, to their credit, it does give a lot of detail and some requirements as to when it's going to be a disbursement, which is not taxable, and when it's a reimbursement, which is taxable. All right, but as always, even with such specific conditions, in terms of principle, the question is whether I need to meet those specific conditions in detail, or whether, as a concept, there are a lot of things I can still argue as a disbursement rather than a reimbursement. Okay. If we can move to the next slide. I think the other one I want to highlight is some developments on service tax on digital services. If you were aware, from 1st January 2020, service tax applies to the provision of digital services by foreign service providers, right? So this is the first time foreign service providers, people outside Malaysia, are required to register for service tax. Now, the tax has been in effect now for more than a year. Just to highlight a few developments recently, what happened when the tax was introduced is that a lot of the foreign service providers still had to spend some time to figure out whether they really needed to register, whether their services were digital, looking at the level of automation and human intervention. So some of them registered a bit late, right? Could have been maybe in March, April, or even towards June. Past June is when they finally determined, yeah, okay, I found that I need to register. So what happened at the time is that when you register, the system or customs automatically register you from that date, all right? But some would have indicated that actually I met the threshold much earlier. So at the time, customs just said, yep, register from that date and go forward. But this year, they've actually been revisiting those registrations and saying that, look, can you provide me your accounts for the last year? And actually, you met the threshold much earlier. So they're backdating the registrations and collecting retrospective taxes. Okay. Another simple one, which you would think is is the use of credit notes and debit notes for adjustments by foreign service providers. Previously, the law specifically excluded foreign service providers from being able to make adjustments in their returns when they issue credit notes or debit notes for adjustments. But this was recently amended so now foreign service provider can basically, in the period that I issue a credit note or debit note, I will just adjust the service tax. And another correction, if you like, was to allow foreign service providers to claim a refund of overpaid taxes, right? So if for any reason, by way of error or by way of contractual adjustments, I overpaid taxes, there previously actually wasn't a provision for me to claim a refund, but that was corrected, and service providers are now allowed to put in this claim for a refund through the normal processes. Okay. That's all I have for service tax. Like I said, just some recent ones I wanted to highlight to you. We'll move on to sales tax and handing over to Nick.
Thanks, Larry. Well, for sales tax, the topics around this new sales tax update has been a subject to debate since sales tax came into effect. To provide you some context to this update, we first rewind back to what was provided in the sales tax law. So the sales tax exemptions by large are generally prescribed in the Sales Tax Persons Exempted from Payment of Tax Order 2018. Will prescribe the types of sales tax exemption which can be granted, as well as indicating its key conditions. There are 3 schedules to the order, namely Schedules A, B, and C. For today, we would want to place our attention to Schedule C. Right? Schedule C, as shown in the slide, is a sales tax exemption that is generally granted to manufacturers for the manufacture of their taxable goods. All right. The schedule specifically lists in scope items, right? And these items are namely raw materials, components, and packaging materials, where these need to be used directly in the manufacture of taxable goods, right? So from the slide, from these, we know as a basic premise, the Schedule C exemption applies mainly on the 3 said items. Okay, so next slide, please. So despite what I mentioned earlier, the old manufacturing guide, which was released back in August 2018, right, 23rd of August 2018, indicated that manufacturing aids can also qualify for sales tax exemption. The guide elaborates what are these manufacturing guides, which are namely goods used to accelerate or improve the manufacturing process. These can include like lubricants, jigs, mold, cleaners, or sandpaper. Right? So in this connection, many manufacturers sought to include such aids in their exemption applications. And because the existing system, the customs existing system, it auto approves applications that were made. So as a result of this, this practice, there is a need for customs to conduct compliance audits on these exemptions on a later period, despite giving the approval upfront. So, well, here is the plot twist. So despite this background, there has been a rise in cases where customs have been disputing the application of the sales tax exemption, particularly on these manufacturing aids. The common argument being manufacturing aids are not listed in the order. So if you remember earlier, the order covers only 3 items. So these resulted in demands for back taxes and to some extent imports being stalled at ports. So though we understand that customs had escalated this matter to the Ministry of Finance, the MOF, given that they are the ones who gazette the order. However, there weren't much remedy back then. So moving on to the next slide. So we fast forward to 1st January 2021. So as you can see here, customs have then just issued an updated guide on manufacturing. Well, this time with the entire section on manufacturing aid being removed. So what does this mean? So what we can observe from this change is that it is now clear that manufacturing aids do not qualify for sales tax exemption. But this clarity came at a cost. So one, how will businesses be impacted, particularly existing exemption holders? Since the exemption was granted in the past and based on the guides back in August 2018. And two, which is alarming, there will be no written documents now, right, to now support the application of exemption on manufacturing aids. But just remember that these were guides. So to add on, the issue of granting sales tax exemptions to these aids has been a matter of debate for some time, ever since dispute cases started sprouting. So we understand that a proposal was put up to the Ministry of Finance via a customs private sector dialogue by customs. But we understood that back then the ministry had no intention of granting this form of exemption. So with these developments, businesses are left with not much options, though there are still steps which can still be considered, right? So firstly, we should first evaluate the company's position while considering this update. So the question is more like, how much is at risk? To what extent past imports may be affected? Is a voluntary disclosure required? Is it necessary? Or how much is at stake that the company needs to defend its position relying on the old guidance? So, but what we know now for a fact is that technically exemptions should not now cease for the acquisition of manufacturing aids. Also remember that the order right now only indicates just three items. So secondly, the option to lobby can be considered, particularly for a prospective or perhaps retrospective application of the exemption of on the aids, but preferably that this is something that should be done at an industry as an industry effort. Well, this is considering our discussion earlier that the Ministry of Finance, having the power to grant exemptions, did not have the intention to grant such exemptions. So imagine if a single company were to do this, I doubt that that would have much of an effect. So nevertheless, should this be sought, preferably at more like an industry level, but of course we would expect an uphill battle. All right. Then lastly, engaging with customs. So this may be inevitable, but we shouldn't cut this out. Discussions can also be held with the customs to perhaps seek for administrative concessions, pertaining to either retrospective implications or to agree or perhaps determine a way forward, including for some form of leniency, right? But this is considering the circumstances of this issue. We have a guide that previously said this is allowable, and now, like how Larry put it, all of a sudden there's a 180 degrees change there, right? So that is quite a bit for just a small update, since its impact can be quite overarching. So we have already covered a few updates here, particularly service tax and covering the sales tax arena. So despite almost having 3 years since its implementation, businesses are still plagued with a lot of these technical issues. All right. So let's move on to the next slide. So here, we will be covering the key business and industry issues that are still being faced. I think you can see earlier from the slides, there's been quite some updates, still issues. So where are we now? What is the current state? So at this stage, you can look at the first point. There are several SST technical positions. They still remain vague, particularly with service tax. Well, for example, despite existing guidelines, that there are still debates as to what extent and installation or assembly service would relate to manufacturing. Another classical issue is that what extent the service is considered taxable management services. Since the interpretation of the term management can be wide, arguments can still arise whether one is seen to comply with the reimbursement and disbursement guidelines. So when we look at the rules, these appear to be concessionary. So remember, as what Larry mentioned, these are just guidelines, right? As for the next point, the SST guidelines have been ever changing. So these could be overnight changes, where new services or in extremes, rules being introduced with little room for companies to even prepare, especially from a system perspective. So businesses are already struggling to adapt to these new rules, changes, But of course, to add salt to the wound, some of these changes have retrospective implications. So from the guidelines, well, it appears that customers are taking a retrospective application to these changes. Then, of course, which can put businesses in a very tight spot. So there were discussions when these were presented directly to the authorities, particularly in our discussions. However, there were no clear solutions to this. Well, companies are either still keeping mum or taking incremental changes, but the risk still exists, right? So now we have covered two interrelated issues, but these are usually sorted out by a common effort executed by an industry where players cooperate, right? They operate as a unit to deal with these SST nuances. But as for the third one, you can see here, well, various players in various industries are still adopting different treatments and approaches to these SST matters. Not surprising, but this is a fact, where one takes advantage of differing treatments due to the ambiguity to gain an upper hand in the business. So you have someone who is suffering because they're charging service tax just for the sake of compliance, whereas another not doing so. So in short, there are still groups which still do not collaborate as an industry in lobbying for technical positions, or even to seek clarity on these treatments. So this spells out as a ticking time bomb, as whomever gets audited and draws the short end of the straw, the tax implications, well, let alone penalties, can be quite detrimental. So they say when it rains, it pours. So we have already gone through the compounding issues earlier, the first 3 points. But from recent discussions with customs, well, despite the lack of technical clarity, we understand that there are plans for them to intensify their SST audits. So this can also be a concern, well, since audits can mean long-drawn disputes and even threats of monetary exposure due to the back taxes or penalties in forms of bills of demand, or in short, BOD. So that is all for this section. But I would like to highlight that though these comments may appear to be textbook statements, right? But we still see businesses being stuck in the same hole. So I hope that these serves as reminders, well, that something needs to be done, and when needed, such issues should be dealt with at the core, right? So let's move on. And that will, of course, now bring us to our first polling question today. So over here, the question here is, at this stage, please describe your level of comfort with your company's ability to manage the current sales tax and service tax compliance environment. So your answers are here very comfortable. We've conducted initial assessments or periodic health checks, or even we are personally, our personnel are aware of SST developments, or somewhat comfortable, where in the middle, conducted initial checks, but no recent health checks. Or perhaps you're aware that, well, you're not comfortable, so no formal assessment and whatnot. Or perhaps, worst case, we do not know, or this is not applicable to you. So feel free to, well, select your questions to this.
Well, Nick, as our participants are answering the question, maybe one question from me is this. Larry and you have alluded to the fact that there's a lot of confusion. I also made a statement in the beginning where there's a lot of uncertainty and with regards to all these definitions and stuff with service tax. What are some of your observations as to how are clients and businesses dealing with?
Well, that's a good question.
Let me just, yeah. Okay. Yeah, maybe I'll just jump in since, yeah, like you said, there's many ways you can do it, right? Sorry, there's many ways you can do it. It varies from them going specifically to customs for asking for specific written advice based on a certain transaction. Some just rely on webinars, on customs talks, or even just online guides and their own interpretation, and of course, tax advisors, right? Yeah. Nick, have you seen anything different? You've got the answers out now.
Well, Yeah, well, unfortunately, in most of our cases that we have clients who only start approaching the matter only when there's an issue, particularly during an audit. So, which is quite unfortunate because many weren't aware and had difficulties in keeping updated to the recent updates. And okay, we now have the poll results. So it seems that a majority of us are somewhat comfortable. I mean, this is a good observation. We can see that there's quite a fair bit of for ones who are not that comfortable. Where I mean, perhaps we don't exactly have formal assessments or confirmations. I mean, this is totally understandable. All right. And that's a good good poll here. So the reason why we had this poll questions is just to probe, particularly the audience, given all this uncertainty, like as what has been presented by Larry and myself, that hey, is there something that I need to address in my own organization, and perhaps this could be a wake up call, right? So we thank you for the input. So I can then pass on this session to Larry again. Yep.
Thanks, Nick. All right, so we ended that and we talked about audits, right? So just a quick overview on the audit landscape now when it comes to customs. Increased focus on audit. So yeah, customs need to collect money, right? They have revenue targets. SST needs to match what they're collecting in GST. So there is an increased focus on audits. That is how they're going to go to taxpayers and make sure there's compliance and the right amounts of taxes are collected. Okay. GST has been gone for 2.5 years, but the main focus and the main resources are still on closing out a lot of the GST audits. Okay. The initial target was to try and get all the GST audits done within 2 years, but I think they're still finding a lot of issues in GST, so they're spending time, and there's a lot of issues and a lot of money to be collected on GST still. Okay. But having said that, they do recognize that now people have had about 2 years to look at SST, and it is time to come and make sure that they are compliant and they are paying the right amount of taxes. So there are a lot of resources being mobilized and a lot of focus being put onto SST audits now going forward. Okay, and just a quick point at the last note. Sorry, was I lost? Was I lost for a while there? Okay, a quick point. They've also had combined audits. Now, what I refer to when I say combined audits is that you might get a letter, a very general letter, to say that I'm coming in to check everything under the Sales Tax Act, Service Tax Act, Customs Act, and with no set agenda, they will come in and look at a whole lot of issues relating to customs issues, right? So it could be normal sales and manufacturing, it could be services you provide, or it could be your import-export activities as well, exemptions that you enjoy. Okay? So can we move on to the next slide, please? Okay, sorry, we just jump into a quick polling question. Since we're talking about audits, just thought we'll get a quick flavor of where everybody is at in terms of customs presence at your businesses, all right? So the question is, are you currently or have you been subject to any GST, sales tax, or service tax on audits by customs, right? So it is either yes, only service tax or sales tax, GST only, or are customs hitting me on all three, all right? Or not applicable, all right? So, yeah, so while waiting for the answers to come in, I guess it's just a matter of just reiterating that look, there's lots of different taxes here that customs have coming in. They know it's a matter of whether they are going to be focused on one tax at a time or throw the net and try to collect as much as they can. All right. So there are a lot of so customs themselves have to get organized. Right. GST is still bringing them in a lot. They do realize that sales tax, especially, we've seen a lot of sales tax audits that have been coming in because sales tax is a very the mechanics of sales tax can be complicated in terms of exemptions and what tax I have to pay. Right? Okay, we've got the polls, and as expected, in terms of service tax, sales tax, and GST, the majority seems to be on GST only, right? Like I said, customs are really trying to close off all the GST audits. There are some who have all three going on, that 4.5%. Yep, so you should have quite a bit on your plate. And no audits at all right? So that is actually quite reflective on the point that I'm making that GST, they still have a long way to go on GST, right? So a GST closure audit has to come in for all companies, whether or not you're in refund positions or tax payable, they're supposed to carry out on all companies. And almost half the participants have said, I've got no audits at all. So it looks like there's still a lot of audits to be done and all of preparation to be done for audits. Okay. We can move on now. Okay, so just want to highlight, let's highlight a few things that have come up in GST audits. We've handled quite a few, right, in the last few years. These are some of the ones I want to highlight which are common and also seem to try and collect the most money for customs. Okay, now the first one is on all non-standard rated supplies. So wherever you have a zero rated, exempt, or you sell under some GST relief, those are the ones that you're going to come up with. It could be a straightforward treatment, so there's no disputes. But for example, some of the ones we've seen, the big ones, I treat all exports as zero rated, right? I don't charge GST when I export. Then you go to the level of the documentation. Is the export declaration form or the K2 form in your name? If you have some other type of arrangements where it's indirect export or the K2 form is not in my name or some of the shipping documents don't match, customs have claimed that, okay, this is not evidence of an export. You've got no proof that these goods have gone out. It's not in your name. I want to collect the tax back on it, right? So what you were thinking is a simple process of export. Customs have come back to attack these with a vengeance sometimes. Another big issue I've seen, this would be more for property developers. Residential property was GST exempt, all right? Commercial property is taxable. We have had some cases where customs have now come in and said that, look, this property that you sold, it's a service department, the title is commercial, so the use can be mixed. And I sold it as a residential property. For all intents and purposes, it was meant for residential. Customs and said, no, I think it's commercial. I want to collect tax. And can you imagine the amount of tax collectible for property sales over a few years? Okay. Another one we've seen recently is tax on transitional issues. And when I say transitional, means transition right back to the time when GST first came in, where transactions straddle that implementation date of April 2014. Or whether if I collected money, if I issued an invoice, or the service straddle that part, or it's a question of whether any part of that service or goods should have been accounted for or apportioned to a GST period. Okay, we have seen some big amounts being collected on this. Another one is on bad debt reliefs and repayments, another popular one. When bad debt reliefs were claimed during GST, the question here that comes up usually is one of sufficient efforts, right? The law says that you're eligible to claim bad debt relief. One of the conditions is that you must have undertaken sufficient efforts. What does that mean? The law doesn't say so. The issue has come up more when after GST was repealed, you were still eligible to claim bad debt relief, and as well as you were supposed to account for GST on repayments of bad debt that you previously claimed. All right, and a lot of people did not do this. And the other thing I want to note is that their level of the standard of what they considered as sufficient effort seemed to increase after GST. There's a more stricter interpretation of what is the level of sufficient effort. Do I have to write off the debt in my books? Do I have to take legal action? Right, things like that, or are simple reminder letters sufficient? So these are the areas and the issues that they are attacking. Input tax credit for non-payment of vendors. On the other side of the coin, if I claim an input tax credit on an invoice I received, but for whatever reason, dispute, I did not pay my vendor after 6 months, I was supposed to have accounted back for that, paid back that input tax that I claimed. We find a lot of people either through their policies or through omissions, they did not make that adjustment, and that is another area where customs have come back to collect some money. All right. Blocked input taxes, if you recall, things like motor vehicle expenses, some insurance, medical, entertainment, a lot of things were specifically not claimable for input tax. And even though you think it was relatively clear, customs are still finding a lot of taxpayers who were either inadvertently or because of non-clarity of what they were claiming, but they still are collecting some money on input tax claimed on blocked input taxes. Longer period adjustments, these are for mixed suppliers, right, where you had standard as well as exempt suppliers. Typically, these would be your property developers, right? But to a lesser extent or to some extent is as well investment holding companies. There was a change in the law midway through where an investment holding company became a mixed supplier by virtue of investment income, all right? And a lot of them either omitted or didn't realize that they had to do longer period adjustments, which results in overclaiming of input taxes. Right. Imported services, yep, another easy area. If you remember, all imported services I needed to account GST under reverse charge. Wasn't so much of an issue because I was allowed a corresponding input tax credit claim, right? So it would have been, if I was providing wholly taxable services, it's not an issue, not an impact for me. But customs now come in and find, if they come in after now that GST has been repealed, they find that a lot of imported services transactions were missed out. So they will happily collect the output tax from you, but you will not be allowed the corresponding input tax credit deduction, right? Recharge of expenses. This one I just wanted to highlight an example we had where within a group of companies, if there's one company that sort of pools a lot of expenses, a lot of those expenses can be blocked. For example, maybe your motor vehicle expenses, insurance costs. So those would have been blocked at that holding company. Now, when it is recharged as part of a management fee or recovered from companies in the group, the question was whether that should be a separate supply as taxable as a management service or some other supply, or whether I go back to the underlying service and block it again as a blocked input tax, right? So I've seen some issues where customs come in this, and this is an argument that we've had with them as well. And again, reimbursements and disbursements, I mentioned this again earlier on for service tax as well. The issue was there for GST. They had some guidance or some rules on what should be a disbursement or reimbursement, but they were not easy to meet. And a lot of people took positions that it could be supported as a disbursement in principle, even though I didn't meet those exact conditions that customs suggested. All right. So on GST, these are some of the issues where I just wanted to highlight where we've seen customs coming from and where they are collecting their revenue from. All right. If we can move on to cover some service tax issues now in audits. All right. So the first one, of course, taxability of services. As you know, service tax is on prescribed services. It's not as wide as GST, where anything I do for a consideration is going to be subject to GST. It's got to fall within a specific category of services. So the common disputes are around what is a management service. I think we've mentioned this a few times. The scope is pretty wide, open to interpretation in the law and in the guides. Consultancy service is another one. When is it become consulting or advisory versus just me following instructions? IT services was also pretty wide. Pretty much anything that involved computers or online became IT. Digital services was introduced last year as well. All right. Arguments around digital services are whether the level of automation and whether it falls within digital service or not. All right. And another one which really is very subjective is that of exported services. There's no actual word exported services in service tax law, but it basically says any services provided in relation to goods or land outside Malaysia, or where the subject matter is outside Malaysia, is not taxable. Subject matter is a really subjective interpretation of whether or not the service would be taxable. Okay, and there's so many interpretations and variations of a transaction where I could argue otherwise, whether it's subject matters outside or inside Malaysia. Exemptions and reliefs, like I said, customs have introduced quite a few facilities to provide to reduce the tax cascading impact. They've got what the popular one is the B2B exemption, right? But there's lists of conditions to be met, and these are easy areas for customs to attack if they come in. If any of those conditions are not met, they will just withdraw the relief and seek to collect back taxes. Intra-group relief, services provided between group companies. Recently, there was an amendment to this where they allowed up to 5% of services to be provided to non-group companies, but there is still a lot of uncertainty as to how exactly this 5% de minimis rule is going to be interpreted. Is it on a retrospective, prospective basis, right? So this is something actually still not tested yet. Customs have said that basically you would need to just be certain that your services at the end are going to be less than 5%, otherwise you're going to have to pay back that tax. And imported taxable services, again, for service tax it is worse because whatever that service tax import, that reverse charge comes out of my pocket, I do not get any corresponding input tax credit. There are some reliefs available for me if I'm on providing that service, but generally it's an easy target. If I get an invoice from a foreign service provider and I just forget to account for service tax on it, that's going to be money in customs pocket. Okay? So those are some of the main things I just want to highlight for service tax. I think, Nick, you have some things to cover on sales tax. I'll pass it on to you.
Yep. Thanks, Larry. So touching on the common areas which customs may observe for sales tax, we'll split this into three main categories, namely technical, documentation, and exemptions. Right. So under technical, the nagging points would usually be on the classification of goods. Since exemptions and sales tax rates rely on the tariff codes applied to such goods, classification serves as a crucial point of discussion. And it's a common dispute area, particularly at ports or even in post-import audits or additional audits, right? So next would be the basis, sales tax basis point. So if businesses account for sales tax at the wrong timing, this may lead to late payment of sales tax where penalties can apply. So these can be gold mines for customs to look into. And as a recap, the sales tax trigger points, notwithstanding imports, are usually when goods are sold, disposed, or used. Right? In the case of documentation, focus would simply be on the company's ability to substantiate a particular sales tax treatment applied. This would include maintaining proof of exports, especially when exports generally do not result in sales tax. Also, whether relevant supporting documents or reports are maintained as required by customs due to other reasons like the SST 02 return. So other areas can also include the completeness of a sales tax return being filed, because where exempted transactions are reported, there's such a requirement, or exempted purchases as well. So lastly, we touch on exemptions, right? A reminder to everyone that is not always the finish line when one is granted with sales tax exemption. So it's always important that companies are aware of the exemption conditions and apply measures to comply. So these are usually attached next to the approval that is usually being granted by the relevant issuing authorities. So having said that, a common area of observation by customs would be on the company's ability to comply with these sales tax exemption conditions. And this is in addition to whether the company is utilizing the correct type of exemptions. Because up to this date, we are still hearing stories of companies using incorrect exemptions. So as usual, having failed to comply these conditions can also result in back taxes, right? So we said above, businesses may need to observe these common pain points with more scrutiny so as to prepare for or avoid potential pitfalls for sales taxes. Okay, but we move on to the next slide. So, given all that is discussed today, right, there are some observable developments to actually take note. So though not publicly announced, we have seen amongst our clients where customs are starting a penalty remission program for GST audits. The penalty waivers appear to be granted on case-by-case basis, provided that the company commits to pay the GST amount demanded. Though there may be potential installment plans which the company may sort for. But having said that, for companies in the midst of a GST audit, right, it would be a good point that this is a conversation to be initiated with the customs in the event that there are any findings that were to arise. All right. So next one on voluntary disclosures for SST, right? So I think we have discussed earlier that there is no formal framework for this at this stage. However, the law does provide that the Director General of Customs has the power to waive penalties. So considering this fact, there has been cases where companies have successfully obtained waivers for their SST penalties. And this is all done under such voluntary disclosures. So, but we do remind you that despite what we have mentioned earlier, these outcomes are strictly on a case-by-case basis, because we also have seen some fair shares of rejections rather than approvals. But it is a balanced sort of thing. Okay. And next point here, we have also observed a rising trend. This is interesting. A rising trend of industry players tipping off on competitors where inconsistent SST treatments have resulted in unfair advantages. We've seen audits being executed for a sales tax registrant, even on service tax as well. So from this, what we can gather is that it appears that it's like a natural environment where the industry players seems to be taking action to actually level the playing field. All right. But of course, this is it's not ideal, of course, from a business standpoint. So lastly, a point that everybody has been wondering, all right, will GST ever return? So nothing is exactly carved on stone yet. However, we are aware that there are efforts in studying the re-implementation of the tax, where opinions have been sought from several sectors by authorities as to what do they wish to see in if GST were to return. In fact, I think we've also seen some officers being transferred to these special new divisions. So in short, this is an interesting area to observe for now. But this would mean that we should also be on our toes, particularly when entering into contracts or being engaged into new transactions or arrangements, because knowing that we will need to factor the potential changes to these tax laws. We have experienced this during the transition of SST 1.0 to GST. It was a mess back then. And now GST back to SST 2.0. So I guess they have always said, well, twice bitten, we should be shy by then. So assuming the third one, we'll just have to be prepared by then. Okay. So that is all for my part. And I will be handing this session over to Yu. Okay. Thank you.
Thanks, Nick. Now, let's as we conclude, let's look at some key takeaway points here from today's. But first of all, SST continues to evolve, but there's still many gray areas and confusion on customs interpretation and positions are taking on technical matters. We are observing some. The question is asked as well here. One of the questions, the customs position, how's customs position during audits? We are observing some pretty aggressive positions taken. And for businesses, to us, if nothing else, it is important in this message is for all is that to be proactive. Nick mentioned that some of the points brought up is as if coming up from a textbook, but I can't help but to look at those lines, and every one of those lines is actually someone's bad experience, right? So important to take steps and be prepared. For example, do your reviews. You have some. It's good to see that more and more people are doing their reviews as was shown in the survey. And that is a big help. People are seeing the value when they are audited. If they do the review, that helps a lot during the audit. Now, if non-compliance is detected, you can consider a voluntary disclosure to manage the exposure and disruptive actions. Now, just to answer a question that is important here is this. Someone asked a question, if you do a voluntary disclosure, will it lead to a full audit? Now, this is what we're talking about here. Whilst this is something that customs is encouraging, but there's no formal framework for indirect tax compliance, voluntary disclosure, right? It's something greatly encouraged. So because of that, to avoid that risk as well, it's important to have a strategy. How do we approach this voluntary disclosure? Yeah. Normally, the way, in short, we do it is normally we will go on behalf of the client to tell the customers first at the highest level possible on a no-name basis that you want to do this disclosure and what are our requests if we do this disclosure. And oftentimes, one of the requests we make is that, look, if you come for this, we are making this disclosure, please just check on this part and don't go to the rest of the whole company. And so far, from the ones that we have done, they have been quite respectful of that and just focus their attention on that particular aspect of the disclosure. Now, moving forward, we continue to expect tweaks, and it's all for customs, it's always asking feedback as to how do they collect more money, right? So the tweaks are all moving towards collecting more money for them. And finally, customs is redeploying more and more people to look into GST. And this is the space to watch. Yeah. So that's the end of our formal session. Now, we got a few more minutes for Q&A. I think first question is about retrospective application of the changes to the guides. There's a question about building maintenance, about retrospective, whether or not there'll be retrospective application. Would Larry want to handle it, Larry?
Yeah, sure, Eng Yu, thanks. First, the general question of whether a guide is retrospective, right? Now, if you see the guides, they always start with a point to say that customs view is basically this, all right? The law has been there since 1st September 2018. The guides are just my interpretation of how that law should have been interpreted. And in general, they say all this should go back right up to 1st September 2018. Okay, but it becomes, if you had taken a position, if the guide, let's say, was not clear at the beginning, or there was no guide in the beginning and you took a position, then I would argue that, well, that is based on my interpretation, I took a educated position, or I even went to customs. Particularly in terms of the building management services, they actually, in October, the guide said it was not taxable. And then a few months later, they amended to say that it's taxable. So the short answer to the question is that technically they can go back retrospective all the way to September 2018. But I would argue to say that no, I've taken a position based on this. This is my position. And your guide actually confirmed my position in October. And the fact that you changed it in January, I should at least, at the very least, if I want to comply now, it should take effect from January 2021. All right, so that's the position that I would take. In the meantime, what do you do? Do I take the decision? Maybe just to let you know that we are aware, we have helped some industry groups to lobby to customs and also to MOF on this building maintenance management services, but there's no developments on that to date. Okay, but we can't wait for them to come back to that. So in the meantime, you have to consider things like, do I charge my tenants now? Do I charge? And if the guide suddenly changes again in a few months, then do I credit note and adjust that back? Hanging over this is always the risk of penalties for non-compliance, which, if you're aware, goes up to 40%. Right? I hope that answers your question.
Okay, thanks, Larry. I think we got about a minute or so. Important questions here, which I think I should raise, and then close the session. One is relating to a foreign service provider for a digital service tax. Question is, if the foreign service provider does not charge the tax, is the Malaysian party responsible to account for the speak? Short answer is yes. But having said that, that doesn't mean that the foreign service provider do not have to comply and register under the digital service tax. In fact, the primary responsibility is for the foreign service provider to assess whether they are liable to register or not under the digital service tax first, right? And the fact that the Malaysian party has to account for it, that is customs way of
So yeah, just to carry on,
having a double protection. Sorry, Derek.
So it is not an it's not an option for the foreign service provider and the local customer to say either you or me account for it, right? The law is that the foreign service provider has to register. How customs goes after the foreign service provider, it remains to be seen. But customs have two bites at the cherry, so they collect the tax from the service recipient under reverse charge. Yes.
Yeah, and I think.
But I guess also to add on.
Yes.
Yeah.
I
guess perhaps.
Finishing.
Right.
The last question relates to some services, marketing support from a related party. Now, these services for service tax, whether it's taxable or not, I think this one we should need a bit more discussion offline. But the point is that if the services are provided to your related companies under service tax, there are provisions for group relief. If you meet the conditions. Yeah. Okay. I think right. We are now out of time. And unfortunately, that's all the time we have for today. Well, Nick and Larry, thank you so much for sharing your experiences, and special thanks to all of you who are able to join us. We would like to encourage you to fill out the short survey that will pop up on your screen momentarily and tell us what you think about today's program. If you join us late, please note that this presentation will be archived for future viewing. If you feel others would benefit from this webcast, please share the webcast via share this icon or have them visit the debrief website. We will respond to all the questions submitted during the webcast in a couple of weeks. Also, if you think of any questions or comments later, please feel free to reach out either to me or the speakers. We'll be more than happy to talk to you. And please don't forget to tune in to our next scheduled webcast from the Corporate Income Tax series on 27th May, titled Structuring for Special Purpose Acquisition Company, SPAC listing, Tax Consequence and Other Key Aspects. And last, from all of us at Deloitte, thank you for your participation today, and stay safe. Goodbye.